Hello and welcome to the webinar talking about the merger of the IIRC into the Value Reporting Foundation. We're here to introduce you to the new organization and to describe how the IR framework and the SASB standards fit together. We had nearly 3,000 people registered for the two webinars that we are doing today. So we are overwhelmed and thrilled that there is so much interest in what we're doing. Before we get started, let me just cover some housekeeping. We definitely want to take questions at the end of the webinar. So please use the chat box, in GoToWebinar, and I'll try to moderate some questions at the end of the session. Go to the next slide. I'm going to ask our speakers to introduce themselves. We have a terrific group today. I'm Janine Guillot. I'm CEO of SASB, and I'll be CEO of the Value Reporting Foundation. Charles, do you want to introduce yourself? Charles, I think you're on mute.
Thank you. I'm Charles Tilley, and I'm the CEO of the IIRC.
And Charles will serve on the board of the Value Reporting Foundation post-merger. Alex?
My name is Alexsandro. I am a group CFO of Itaú Unibanco.
Great. And Leon?
I'm Leon Kamhu. I'm the head of responsibility for the international business of Federated Hermes.
Thank you. And we're thrilled to have Alexsandro and Leon, who will share both a business and an investor perspective on the merger later in the session. So if we go to the next slide, what we're going to do today is I'm going to do a brief introduction of the VRF, and then we're going to talk about some of the work that we've done to map the SASB standards and the IR framework. And then we'll talk about the business and investor perspective on the standards and the framework, and then take some Q&A from the audience. So next slide. Why are SASB and IIRC merging into the Value Reporting Foundation? And both SASB and IIRC over the last 18 months have been very much committed to and engaged in the efforts to simplify the corporate disclosure field. And so one of our aims for this merger is to simplify the field. We also want to globalize both organizations, with SASB being strong in the US, IIRC being strong internationally. We want to focus on reporting as a means to improve decision making. So reporting is not an end in and of itself. Reporting should be a means to improve decision making by both companies and investors. And one of the things that I think is really exciting about this merger is that historically, IR has put a lot of focus on improving management and board decision making, and especially around integrated thinking as a way to improve management and board decision making. SASB has put a lot of focus on how to improve investor decision making, and the SASB standards as tools for improving investment decision making. And by merging SASB and IR together, we have under one roof what I think of as an end-to-end tool set. Integrated thinking to improve business decision making, both the IR framework and the SASB standards as tools for external communication, and then the SASB standards as tools to improve investor decision making. So I think it's very, very exciting to think about that range of tools being in one place and linked together more coherently. We want to advance the adoption of integrated thinking, integrated reporting, and the SASB standards, and then we want to accelerate progress toward a comprehensive corporate reporting system. If we go to the next slide, So what will the Value Reporting Foundation be? And we get a lot of questions about, well, is the IR language going away? Is the SASB brand going away? Think of the Value Reporting Foundation as a holding company. The Value Reporting Foundation is one global organization. It will have a unified strategy. It will have a single governing board. It will be one team, but it will have three principal products. And those principal products are the integrated thinking principles, the IR framework, and the SASB standards. And what we want to do is bring those three things together more tightly over time, aligned with what we call a common organizing structure or common architecture, depending on what word you use, but bring them together over time so that they're coherent from both a preparer perspective and a user perspective. And then we actively support, I think many of you know, the ambition of a global sustainability standards board under the IFRS Foundation's governance. We are involved in the IFRS Foundation Technical Working Group to support a sustainability standards board, and we are committed to supporting that effort. If we go to the next slide, I'm going to hand this over to Charles now, and Charles is going to go into a little bit more detail about both the IR framework and the SASB standards and how they fit together. So Charles.
Hello again. Building on what Janine has already been talking about in terms of how we fit together, I think many of you who are already using the IR framework and the standards, SASB standards, will attest to a comprehensive, robust, holistic system for reporting needs both frameworks and standards because of the different purposes that they serve, and in effect they support each other. So the international IR framework establishes guiding principles and content elements that govern the overall content of the integrated report. And they explain the fundamental concepts that underpin them. If you like, it provides the how and drives a holistic view of the value creation process through the governance and business model disclosure and the connectivity of the information. While the IR framework provides the how, the SASB standards provide the what, helping to add that comparability and to sustainability related data across peer companies. So and looking here at the table now, the IR framework is industry agnostic, while it is primarily written in the context of the private sector for profit companies of really any size. It can also be applied and adapted as necessary by public sector and not-for-profit organizations as well. But SASB has developed a set of 77 industry standards, providing a set of globally applicable sector-specific standards which identify the minimal set, if you like, of financially material sustainability topics and their associated metrics for the typical company and in that industry. The IR framework is taking a principle-based approach, so it doesn't provide specific key performance indicators or measurement methods or the disclosure of individual matters in the way that SASB standards do. What is key to the IR framework is the holistic view across all of the resources and relationships an organization uses and affects, and how these are interrelated, driving connectivity of information. So the total integration, if you like, of everything that you need to think about in terms of value creation. And then the SASB standards, on the other hand, enable comparability of information across similar organizations as they apply the same metrics for that particular sector. And if we can move to the next slide, please. So the IRC and the SASB merger are not an end in itself, as Janine has already said, but instead we see it as a major stepping stone to delivering a comprehensive, connected and holistic system for reporting. And we're working with the other major players in this space to drive forward such a system. And in this slide, we set out the role we believe the IR framework and the SASB standards can play in the system. With the IR framework connection between the financial reporting and sustainability reporting, and the SASB standards providing the industry-specific disclosure needed to drive robust reporting. And the IR framework and the SASB standards both have investors as their primary audience, but as this slide demonstrates, there is also an important role, very important role, for the standards and jurisdictional requirements, policy if you like, for reporting impacts on the economy, the environment and people. And this is where the GRI standards are so important. And the Value Reporting Foundation has been appointed to the working group of the IFRS Foundation, and we're very much supporting their efforts to build the robust reporting system through the creation of the Sustainability Standards Board, which is that Janine was referencing earlier, and which we are entirely committed to. And if we can move on to the next slides, please. And in this slide, we depict how an organization needs financial statements prepared in accordance with International Financial Reporting Standards, or US GAAP, to provide insight into financial capital. And then the SASB standards provide the insight into the natural, human, social and relationship and intellectual capital. And it's then the International Integrated Reporting Framework which prompts strategic integrated thinking across the capitals and drives management analysis of risk, opportunities and resource allocation. So used together, they provide a more complete, I would say, a comprehensive picture of the long-term value creation while meeting investor needs for comparable, consistent and reliable information. And if we then move on to the next slide, where I just wanted to talk briefly about materiality. And here we set out the concept of nested materiality. The three forms of reporting are deliberately depicted as distinct and nested lenses because the nature of disclosure on the sustainability matter that serves each perspective can vary and can vary significantly. Materiality is therefore a dynamic concept, and matters move between all the three lenses over time. And reporting that reflects all the significant impacts typically addresses the broadest range of sustainability matters, the outer grey box. Reporting on enterprise value typically addresses a narrower range of sustainability that are considered sufficiently likely to influence enterprise value. And then in the smaller pink box, we have the reporting that relates directly to the monetary amounts recognized in the financial statements. If you like, the narrowest range of sustainability matters. And both the IR framework and the SASB standards have materiality based on value creation considerations. And if we move on then to the next slide, and looking now at the value creation process. And here we're looking at the business model framework that's in the integrated reporting framework, which was updated and relaunched in January this year. And through integrated reporting, and as depicted here, organizations have a better understanding of the resources and relationships that they rely upon to create value. These resources and relationships are what we call the capitals, and they are stocks of value on which all organizations depend for their success as inputs to their business model, and which are increased or decreased or transformed through the organization's business activities and outputs. So on the left-hand side, the value creators, value drivers, sorry, the activities in the middle, and on the right-hand side, then the outcomes, increase, decrease, or transformed through activities. And the important thing about the integrated report is that it drives the connectivity of information between all of these resources and relationships, all of these capitals. And of course, the SASB standards can be used to help inform the organization's understanding how they use the capitals and their actual performance across them, how they are actually increasing, decreasing, or transforming. And if we can move then to the next slide, please. And obviously, a question we're always being asked is, you know, how we are to align our standards and frameworks. And in a report published by CDP, CDSB, GRI, the IIRC and SASB, all framework and standard setters, which was published in December and entitled Sustainability Matters, was defined as all the value drivers represented by the capitals in the IR framework, with the exception of financial capital. So the SASB then organizes that universe of sustainability risks and opportunities into sustainability dimensions. And those are also known as the universe of sustainability issues. And this provides a structure for SASB's industry-specific standards. Now, we're currently mapping the 5 IRC capitals, excluding the financial capital, to SASB's sustainability dimensions. And what that reveals is that the SASB standards already provide industry-specific disclosure topics and metrics for 4 of the 5 capitals, and Janine will be talking about this in a minute. So the SASB standards exhibit that high alignment with natural, social, and relationship and human capitals. Issues associated with SASB's business model and innovation and leadership and governance dimensions are generally aligned with one or more of the integrated reporting capitals. So in the future, and I think this is very exciting and important, SASB standards will likely evolve to ensure businesses can provide metrics and data on all of the 5 capitals to drive that robust, comprehensive reporting. And they'll be evolving over time, and we plan to merge the 2 to build a common, comprehensive architecture for reporting, something we're already beginning to work on. And with that, I'll hand back to Janine to provide further detail.
Great, thanks, Charles. And let's just stay on this slide for 1 second. You know, for all the preparers on who are listening today, one of the things we hear consistently is language really matters. And when people use slightly different words to communicate similar concepts, it just contributes to confusion in the field. And so one of the things we really do want to do is harmonize this, what we call top level structure or top level architecture, so it becomes the way the IR framework and the SASB standards fit together become more coherent over time. So things like the IR framework uses the word natural, SASB capital, SASB uses the word environment, the IR framework uses the word social and relationship capitals, the SASB standards use the word social. Can we really harmonize that to have a common top-down framework? And then if you're either a preparer or a user, the IR framework and the SASB standards would fit together very coherently. So if we go to the next slide, in the absence of that actual alignment and harmonization being done yet, what we have done as an interim step is we have mapped the SASB standards to 4 of the 6 IR capitals. And for those of you who know the SASB standards, the way they're structured is there are 26 general issue categories under the sustainability dimensions, and then there are industry-specific disclosure topics and related metrics underneath the general issue categories. And what we have done is we have mapped all of SASB's industry-specific disclosure topics to 4 of the 6 IR capitals. And what that does is, if you're a preparer of an integrated report and you want to think about how to use the SASB standards in an integrated report, it tells you exactly which disclosure topics are relevant in your industry for preparation of your integrated report. So let's give some examples of that. If we go to the next slide, I'm giving you just 3 industry examples of what that mapping is. So here are the 4 IR capitals that today are covered by the SASB standards: intellectual, social and relationship, human, and natural. And here's an example for oil and gas, exploration and production, of the relevant SASB disclosure topics for those capitals. And then each of those SASB disclosure topics, if you go to the actual standards, have metrics. We've just given you examples of a couple of the metrics on the left hand of this slide. So to talk through an example, IR has the concept of social and relationship capital. SASB has a disclosure topic around community relations, and then our community relations metric is around number and duration of non-technical delays that may have been caused by issues around concerns in the community. So that's just a real example for one industry about how the SASB standards can help provide more detailed disclosure topics and metrics for use in an integrated report, and that then creates more comparability across integrated reports for investor use. If we go to the next slide, here's another industry example for you: automobiles. So in the automobile industry, again, the same 4 IR capitals: intellectual, social and relationship, human, natural. And here are relevant SASB disclosure topics for those capitals. So the intellectual capital, one relevant disclosure topic is fuel economy and use phase emissions, a really important topic right now in the auto industry and a really significant source of competitive differentiation and use of intellectual capital by the auto industry in improving fuel economy and reducing use phase emissions for their products. Another example under human capital, labor practices. SASB has a disclosure topic around labor practices, which provides insight into the management of human capital. So that's another example in the auto industry. And then let's show one more example here, and this is the chemicals industry. So same 4 IR capitals, and then what are the industry-specific SASB disclosure topics around those IR capitals? So if we look at intellectual capital, something like packaging life cycle management, and how can a company really differentiate itself around reducing the impacts of the life cycle of its packaging. If we jump to something like human capital, workforce health and safety, very significant issue in the chemicals industry. Or if we look at natural capital, all of the relevant SASB disclosure topics are around greenhouse gas emissions, air quality, energy management, water management, hazardous waste management. So this just shows you how the SASB standards can be used to put more detail and more comparability into an integrated report. So if we go to the next slide, what to expect next in terms of the launch of the Value Reporting Foundation. We have not actually merged yet. Some people think we have, but we have not. The merger will close the first week. We're targeting the first week of June. We will continue to provide ongoing guidance of how to use the IR framework and the SASB standards together. And we're going to work to more closely align the concepts in the IR framework in the SASB standards over time. And then we will, as Charles mentioned, continue to support the global efforts, especially the efforts under the IFRS Foundation, which is the parent of the International Accounting Standards Board, to create a more comprehensive corporate reporting system. So that's it for the Value Reporting Foundation. With that, I want to transition into the next section of this webinar, which is for you to hear in their own words, business perspective and investor perspective on the SASB standards and the IR framework. So I'm going to turn it over to Alex to give the business perspective. Alex, you're on mute.
Do you hear me now?
Yes, perfectly. Thanks.
Oh, sorry for that. Thank you very much. It's a pleasure to be here. I really welcome the Value Reporting Foundation initiative. I think it's an initiative in the right direction of merging two independent approaches, but that they aim the same result, which is better communication with investors and the market about sustainability. I am also a trustee of the IIRC Foundation, so I greatly appreciate your support for the initiative on the IIRC Foundation to try to progress in this direction. For me, the connection between the integrated report IIRC framework and SASB is really strong. So I've been through that process myself. I start to prepare integrated reports by 2016 and work in a financial service company, so a bank. For me, this is pretty natural because the issue of sustainability is not important only from investors' perspective. Of course, it is important from investors' perspective, but not only from investors' perspective, but also from a customer perspective. So unlike in other industries that may sell products that customers can consume immediately, or companies that establish a very short-term relationship with the customer base, banks establish very long-term relationship with their clients, their customers. So people trust financial institutions with their savings, their lifetime savings, for 50 years or more. So it's really important to establish long-term relationships. Sustainability is really relevant on both dimensions. And so the initiative of the IR framework was pretty important for us. It helped to organize our narrative, helped to organize our capitals. So the framework was really something important in terms of organization, in terms of putting more structure in value reporting. Now the term that you use, that's I believe it was the objective since the beginning. So I see the IR framework as very important to organize the whole narrative for the financial reports and for the integrated report on itself. We took the decision to have one report only, so what we call the integrated report, so that merges the traditional financial report of sustainability report, and which everything put together constitutes our integrated report. The SASB standards complement the IR framework pretty well, because what SASB is more focused is on specific disclosure features, and we believe that they are very important to populate the IR narrative. So when we're talking about our borrowers, so people that we lend money, and their environmental practices, that's something that we monitor very closely. So this is something that is measured and disclosed under SASB framework. And the same thing happened with our investment arm. So talking about the investment our assets under management, we are a significant asset manager in Latin America. So we also have very strict and rigid ESG criteria for our investments, or the investments that we make on behalf of our clients. So these are only two examples of disclosures being made under the SASB framework that fit together very well with the IR framework when we organize our our report in terms of the capitals, especially social capital, which is specifically important at this moment when you consider the several effects that the pandemic has had on countries, people, and companies. So I think the SASB standards and the SASB disclosure standards, they fit very well on the IR framework, and I think the merger of both are really an improvement in terms of perspective. What I would say about the future, which is, in my view, important, is the need that we have to organize data, and data that's more comparable. Because for information to be useful for investors, it's very important that this data is comparable. So I was mentioning ESG practices of borrowers. I was mentioning ESG practices of companies that we invest in, and those practices and the disclosure about those practices have to be comparable. So I think it's a big challenge for the future, and that's a challenge for the Value Reporting Foundation. Is a challenge for the new initiative of the FRS Foundation, is to produce standards or to produce guidances that can be comparable. So the idea of developing a common framework, but also a common framework that can be comparable. So information that is viable to be obtained, to be produced, to be audited, and to be comparable. So I think this is an important challenge for the future, because even the most basic information that you want to provide on this topic can have different metrics. So you can have different metrics for the number of customers you have. You can have different metrics for any variable that's relevant. And when you have different metrics, you lack comparability. And I think comparability is something that is pretty important for the future. In terms of the finance function, I think the finance function has also to adapt to this new reality. I think the professionals that are involved in financial accounting reporting have to evolve and have to adapt. I have this discussion the other day with a friend of mine who is an accountant as well, and say, well, if you want to be trained as an accountant today, I think we will have to adapt significantly from what we have been taught and how we saw the profession, and consequently the finance function of the corporation. So I think there are pretty important challenges for the future, challenges for providing more relevant information, challenges related to provide more comparable information, and I think this merger can help significantly in that direction. And we also have the challenge related to people, because we need really to develop, to attract, to retain the professionals that will be providing this information, that will be interpreting this information for the future. Another element that I like to mention is there is a feedback effect here. So there is a positive loop here in terms when you provide more relevant information, you provide information that is more sustainable in its nature or relates to sustainability as a whole. That also affect the behavior of companies. So the way you report it informs the exterior, inform the people outside the company, but also helps to develop companies' attitudes, companies' practice, and even culture. So I think in this dimension, the Value Reporting Foundation can have a very important effect, not only dealing with financial reporting, not only dealing with disclosure, but also dealing with the actual practice of companies. I'm a firm believer that disclosure matters. Disclosure matters not only to investors, but disclosure matters as well for the companies and the way the companies are managed. Okay, so for the sake of time, these are my comments, Janine.
Those are terrific, Alex. And to build on your point about digitization for the benefit of everyone listening, the SASB standards, we just developed an XBRL for the taxonomy for the SASB standards, and it is out. for consultation right now if anyone is interested in learning more about that, because you're exactly right. We're hugely focused on the question of the future of how this information is ultimately automated and compared. So with that, I want to turn it over to Leon to share the investor perspective. And Federated Hermes has been a long-time supporter of both SASB and IIRC. So we're very grateful for that, and definitely want to hear your perspective.
Thank you, Janine, and thank you for the opportunity today. As Federated Hermes, our purpose as an investment management firm is to create sustainable wealth for investors, to really think hard about what the interests of investors are, which will include thinking about the social and environmental impact on their investments when we are thinking about their long-term interests. And the way we do this is in three ways. First of all, our funds are high active shares, so we tend to invest away from the benchmark in a meaningful way rather than in a trading way. The second thing we do is integrate environment, social and governance factors, both the risks and also the potential outcomes when we make those investment decisions. And the third area is that of stewardship, where we act as an active owner, seeking to encourage our investors, first of all, just to know what they're in business to do, to encourage them to meet the needs of their different stakeholders, and also influence the way they allocate capital. Because ultimately, when one is working in secondary markets, it's who we invest in who are allocating capital. And so with that as a backdrop, as Janine said, we have been supporters of both integrated reporting and SASB for a long time, because it feels it's very much at the heart of the way we work, and we're very excited about this merger. It feels a very natural evolution. We do see the value in integrated thinking, in integrated execution, and indeed in reporting. And to give an example for our own work, and if I could just go to some work we've done in real estate, particularly buildings, we have sought not only to deliver social and environmental outcomes, but also to measure those. So from a social side, we will measure how much public spaces are being used in terms of footfall from the general public, how many students may be taught in the universities and schools which they are in the place which we are invested in. We'll look at how many apprentices we have hired and where they may have moved on to with the skills which they picked up from construction in our area. We've also looked at putting in green roofs to have a positive environmental impact, and also looked at the financial return we've achieved. So I think there is a significant opportunity for the value reporting framework. And three things which come to mind, which I think is at the heart of the value reporting framework, which we would very much support. The first is looking at the overall picture rather than simply the good parts. Often one sees what I call marketing. Energy companies, indeed banks, could talk about what they're doing from investments in terms of investments in renewables, but may ignore what they're doing in encouraging and supporting the fossil fuel industry. It's so important to look at the whole picture, and I believe the integrated reporting and SASB approaches do that. The second area is a focus on meaningful data. So the investment industry recently has been hit with a number of requests for filling in how well we are doing ESG integration, or indeed stewardship, and not only from the clients and prospects in terms of RFPs, but from rating organizations. And as someone who's involved, whose team is involved in filling this in, sometimes it feels very much like a box ticking exercise and not one which is influencing real change. And as Janine said, this has to be about decision making. We want companies to be able to tell their story, but also evidence that story so that it's real. And I think at the heart of the value reporting framework is simplification, is a focus on what's industry specific, and as Alex just said, does allow comparability. And then the third area is what Janine called, or no, it was Charles called nested materiality. And the way I see this is thinking about a value to society. And there's quite a good example of this in CEMEX's integrated annual report. I think it's on page 17 if you wanted to look it up. And what it does, it starts with the financial profit, and then creates a bridge to value society by including returns to employees, the return to the environment, which in CEMEX's case is going to be negative, and returns to the other capitals, which Charles mentioned. And this is an area which is both dangerous, but also, if done right, could be really, really useful. I say it's dangerous is because, you know, if you are measuring the value or the costs rather of harassment in a company, you have to start getting into assumptions on what's the value of an employee, which is not necessarily a straightforward thing to do and also has ethical implications. However, if one can get it right, one can start looking at what's material in the way a specific company might be behaving and how they might compare to their peers. And one can focus in on the areas which matter most. And hopefully, as one sees that data and sees those three boxes which Charles showed on the nested materiality slide, that could have a real positive impact in terms of the decisions which companies will make and the benefit to both the other stakeholders and also indeed to the investor. So we're very excited about what's coming. We think this is a great opportunity. We hope it will simplify the field as well, and encourage companies to get involved, because without companies getting involved in this, then we're not going to have the data which will help us all make better decisions. Back to you, Janine.
So, thank you, Leon. That's very, very helpful. And Alex, maybe if you can come back. I want to thank everyone who's posting questions in the chat. There are some really good ones that I want to spend a bit of time on. But Leon, before we do that, Alex talked a little bit about the implications for the future of the finance profession and finance professional skills for as corporate reporting evolves and decision making evolves so significantly. Can you talk a little bit about your perspective on implications for the investment profession and investment profession skills?
So as a firm, when we really systematically started to integrate environment and social factors and governance factors in the way we think about investments, we were lucky enough to have quite a sizable engagement team, stewardship team, who were engaging on strategic issues, but also on environment, social governance issues. And so at the time, it was very much, what we did was, I called it matchmaking. We got the stewardship team to speak to the fund management team, and that helped inform the fund management decisions. Now, over time, the fund management teams have taken this on themselves, and the engagement team, if you like, only come in and help or support when there may be something a bit more specialist or some knowledge. In fact, I would say a number of our fund managers are more expert on specific environment and social issues than some of our engagement team, and that's right and proper. So it is about the fund manager, because ultimately these issues are material. They're very relevant and material. So if a fund manager is ignoring them, they're not doing their job. And so it is incumbent on the fund manager to be knowledgeable about these issues, just like they might be need to be knowledgeable about the latest technologies a company might be taking, what the marketing approach might be, etc.
So that's interesting, and I'd love to hear Alex's perspective on this, because when I joined SASB, which was 5.5 years ago now, we would consistently hear from companies that investors aren't interested in these issues, or investors aren't asking questions, or if they were asking questions, it was just perceived to be a niche, either a niche part of the organization or not the entire organization. And Alex, I would love to hear your perspective on sitting in a CFO seat. Have you seen that dynamic change over the past few years? And if so, how? Oh, Alex, you're on mute still.
Because it's better. It's okay now?
Yes, great.
My perspective is that over the last, I'd say, 24, 18 months, things changed, at least in my perception, significantly. I would say that over the last 2 years, the concern over the topic of sustainability become more profound, I would say. It would become more specific. So people tend to always, of course, have this concern. I never heard anybody saying that it's against the concept of sustainable wealth creation. But at some point in time, it's very general in nature. And I was like, say, well, I'm in favor of world peace. But now people, okay, what does it mean really in terms of your business model, in terms of the choices that you have to make, in terms of the trade-offs? Because at the end of the day, there is an issue of allocation of resources here, or trade-offs between alternatives. So when you decide not to do a specific project because it has environmental consequences, or to drive a specific sector, you have all the consequences for your company and for the society as a whole. So I would say that over the last few years, this discussion became more specific. People started to ask you the more direct questions. What are you actually doing in terms of diversity? What are you actually doing in terms of allocation of resources? What are you planning to do over the last 5 years? What are the risks? So I think this discussion is more specific, is more down to earth now than it was when I started for release integrated reports, for example. I think it's more down to earth, my view now.
That's interesting. Oh, Leon, did you want to say something? Oh, okay, great. So I want to thank everyone who's putting, oh, yeah, go ahead, Charles.
I was just going to come in and say, I think that over the last few years, the focus probably, and it'd be interesting to hear what Alexsandro thinks, would be more about reputational risk than opportunity. But the fact is that reputational risk has changed very substantially over that last 5 to 10 years, and really meant that the way that companies are behaving with regard to their customers and their employees and wider society has really brought these things to the fore.
Yeah, I agree with you 100%. I think the reputational risk has been a big driver. I don't think this should be the main driver. I think more sustainable business models are more important, as Leon said, because at the end of the day, our objective here, we are entrusted with shareholders' money, and we need to create value over the long term, and that assumes your relationship with your employee base, assumes your relationship with the society, assumes the relationship with the other capitals that we see so well in the integrated report. So I think reputational risk is one aspect that gained a significant dimension recently. But I like to think that sustainable performance and sustainable business models are important on top of reputational risk, even if you don't face immediate reputational risk because of any idiosyncrasy of your industry. For example, your industry is less affected by this sort of issue. So I think the issue of sustainable business models is really important. It should be taken up front in that discussion.
I would agree with you.
Great, thank you. And I want to thank the IIRC and SASB team, which is doing a fantastic job at answering the questions in the chat. But I do want to pull one out that I think is important, which I think is, I think that the theme of this question is, in so many words, whether the VRF just creates a new acronym and what we is often called the alphabet soup. And I want to be very, very clear that that is not the intent. So, you know, think of the Value Reporting Foundation as an organization, but we're not changing the principal products, which are, or we're not adding a new product. The existing products, which are the integrated thinking principles, the IR framework, and the SASB standards remain. And what we want to do is bring those things together into a more coherent whole so that we simplify the landscape. So I just want to really assure the person who was asking this question that we are working towards simplifying the landscape. And we are really working towards implementing and bringing to life the concepts that we laid out in the joint statement with our colleagues around the world last year. So I know there's a lot of stuff being published and it can look like there's a lot going on, but we are trying to all pull in the same direction. Charles, do you want to add anything on that?
Well, I think being slightly flippant, if nothing else, we're reducing the alphabet from 8 letters to 3. But no, I mean, you know, I think you said it at the beginning, we are focused upon a journey, which is delivering effective, comprehensive corporate reporting internationally. And we believe that the reasons that were set out in our strategy are about creating momentum, simplification, and meeting the needs of investors and others.
Yes, and there are also a couple of questions in the chat about the regulatory landscape. The European Commission has produced a revision of what was previously known as the Non-Financial Reporting Directive. The US SEC is looking at whether it should issue guidance. Many other regulators are active around the world. And one of the things and one of the reasons that we're supportive of the IFRS Foundation effort is we believe that the IFRS Foundation effort could potentially provide a global baseline of disclosure that jurisdictions around the world could build on. So we are definitely following all the regulatory efforts very closely, and we are commenting and engaged on many of those. So we are nearly at time. I want to thank the nearly 1,000 of you who showed up, and there will be another 1,000 of you later today. Thank you so much for being interested in our work. We welcome any feedback, and Leon and Alex, thank you so much. You're both leaders in this space, and we can't thank you enough for making time today. Have a good day, everyone. Thanks, Charles. See you soon.
Thank you.